All right, welcome back to the short of it on Zer0es TV. I'm Tyler Neville here with Carson, Freddie, Dan, and a special guest afterwards. But we're going to be talking capital gains taxes, the SPAC implosion, and then we're going to bring up two specific companies that are in the crosshairs of short sellers. So let's jump right into it. What are you guys' thoughts on capital gains, and how is that going to impact the short selling world right now?
Well, first, I'd like to thank everybody for having me back after my unfair suspension. I feel like, not swearing enough is no reason to suspend somebody. But, f it. I'm back.
It's that and your looks.
Oh, I didn't get that memo. Apparently, the capital gains tax, I guess it's a good headline, but are we really thinking that we're gonna just double it arbitrarily from 999,000 to a million, or is it stepped up? I mean, this has been talked about being done before with everybody's money in the market, because where else is it if it's not in the market? Real estate, maybe your venture capital, for very few. This is going to affect a great deal, many more people than we think it will. And I don't think it has a prayer of passing.
Well, okay, putting aside whether it can pass or not, I mean, you say you think it'll affect many more people than you expect it to. The percentage of American households who own financial assets is actually quite small. I mean, I should have looked this up, but I want to say about 10% of households in America have appreciable financial assets. So
I don't believe that.
Okay, well, what would your alternative reality be?
My alternative reality would be something north of 10, give or take 20%. I mean, do you really? I mean, how many people do you know don't have any kind of 401k, any kind of stocks? I mean, what's going on with the retail craze where everybody's opened up their own brokerage account, and you think that's only 10% of Americans?
From perspective of have financial assets received a massive government subsidy since the financial crisis?
Yes.
Yes, they have on that, and that has led to, that's been a significant contributor to inequality, economic inequality in this country, in the bifurcation of society and the evisceration of the middle class. So if the complaint is, well, gee, that's just punitive, I would say, well, you've had this massive tailwind because, the economic policymakers have no better playbook than to pump up your house and your stocks. But I mean, there's a very fair question of whether the money is spent well on the other side of the ledger, in ways that will actually address inequality or some other major societal issue. But that's really a different question.
I mean, they're very related.
So, as a U.S. taxpayer who can't vote, I can only go with what feels good. And so, on the basis that all of our gains are basically short-term in nature anyway, because we're short sellers. And very briefly, when this was announced, the market went down for like maybe 45 minutes. I think this is great. And anything else that equalizes Leon Black's tax rate to mine and makes the market go down should be front and center of all policy decisions from here on out.
Fair enough.
Raising the capital gains tax rate is still not going to make up for your not having Jeffrey Epstein advising you on taxes, my friend.
That's true. But in the spirit of Schadenfreude, anyone else getting feels good.
Yeah, agreed.
The market goes down for 5 or 10 minutes. Why? Because nobody believes it's actually a tenable policy. If they did believe it was an actual policy that was going to pass, it would have much more of an effect on the market. And I agree with you. We already pay, our marginal tax rate, right? So we don't really get the capital gains for what we do anyway. But for those who do, I think it's going to have a big effect on the market, especially with a buy and hold strategy. Like, why would you hold?
I don't think investment needs any more tax preferences or encouragement at this point in our cycle here. When you step back and look at at really the dysfunction in how capital is allocated. I mean, this is what we do every day. I mean, I've seen capital allocation be grossly distorted for years by these policies, even going back to prior to the global financial crisis. I feel like this, equalizing the capital gains tax rate, I don't feel like the country suffers for lack of investment. I feel like the country and the economy suffers for lack of productive investment. And, maybe something like this will help make investors a little bit more selective in what they, invest in.
So we'll move on to the SPAC implosion. We saw in 2020, $77 billion was raised in 228 deals. In 2021, there was 93 billion raised in 283 deals. And that basically happened all in the first quarter. In the second quarter, it pretty much dried up. It's like less than $2 billion, I think, in SPACs raised. And the premium on SPACs went from 27% to down to 2.2%. So what are your guys' thoughts there now in the market?
I have a deli I want to SPAC. I hope it really starts to turn around again. I'm all set for that.
Delis have been done, man. That's very Q1.
Right. I gotcha.
Somewhat similar to 2000, where you suddenly had this massive oversupply of IPOs. You've reached a similar thing with SPACs. I question whether the timing in relation to the vaccine rollout and less retail participation, and I wonder if one would have happened without the other, but it's kind of neither here nor there. And then we're seeing kind of early stages regulation from the SEC, who, have looked at the car crash that have been the Michael Klein SPACs, or, Nikola's, or basically the entire EV space in SPACs. And they're kind of cautiously now stepping in to regulate certain aspects of SPACs. The thing I find kind of unusual is what's staring everyone in the face is how egregious the forward-looking statements are with respect to these, projections 5 years out, whether it's XL Fleet Corp, who have less than $20 million in sales last year, projecting north of $1 billion in sales by 2023 or 2024, or whether it was, Nikola just putting out projections of a car. The question for me is, the SEC have stepped in to regulate, and they've focused on the accounting treatment of the promote. And I don't think that was an area that people were particularly getting carried away with. And I don't think that was an area that was badly understood. So I'm kind of surprised that has been the initial salvo in terms of regulation.
It's hard to regulate the speech components. I mean, IPO speech is very limited. I suspect that different courts throughout the years would have different interpretations as the constitutionality of the limitations on what companies may say when they're in the IPO process. So I think regulating what they may say is probably treacherous ground for the SEC, because should they try to clamp down on what these companies are saying during the pre-de-SPAC period, then, or even shortly after de-SPACing, that could lead to challenge, and maybe even over, and if the SEC lost, it might call into question a number of the other regulations that the SEC has on what companies may say and what they also must say. I mean, a portion of securities regs relate to compelled speech as well, things that companies must tell investors. So there's probably a real issue at the SEC, or look, maybe I'm speaking out of turn here, but with this idea of being aggressive about the speech. Now, the incentives, the way that our system works is, it's reflective of this American ethos that America is a terrible place to be stupid. And so the idea being that if issues are disclosed, like the incentives, then investors are able to decide. I guess the problem is in practice, retail investors are never in on the joke, right? They don't understand what the real incentives and disincentives are for the institutions that subscribe to the SPAC IPO, that participate in the PIPE, get the warrants, etc. And it's just like IPOs. I mean, it's, retail thinks that when companies are able to IPO, it's because you have all these, smart money institutions that want to be married to the stock, when in reality, IPOs happen because a significant portion of institutional investors are just going to flip the stock to, the greater fool who's out there in the market with a bid. So that's, I guess that's the real problem, is that retail doesn't understand the incentives and disincentives. And I think the SEC is really bad at explaining those things or mandating that they be explained, or how they be explained, because, it seems like the primary function of securities attorneys in this world is to disclose things in ways that nobody can understand or can stay awake for. And that, I think, is the core issue.
Yeah, there's a certain art, whether it's in an IPO prospectus or another document, to burying the key bits of information deep enough in, surrounded by enough boilerplate language, that even if you're trying to stay awake and read the thing, your brain automatically switches off.
So how is that legal? Like the Consumer Protection Agency, like you have certain disclosures on, say, your credit card or things like that. How come that's not instituted in SPACs? I think that's kind of absurd.
So really, when you look at legally what is a SPAC doing and what is the regime to which it's subject, it's like when Microsoft acquires Nuance, right? So Microsoft says, hey, we're buying Nuance Communications. This is why we're buying it. This is what our expectations of the future are. And this is pro-transparency. I mean, if you're talking about an operating business acquiring another company, you want that disclosure and discussion for the benefit of the investors. But when you have these non-operating businesses that are making these acquisitions, that is obviously different, but they don't have a regime that can really, differentiate between. We don't have a regime that differentiates between the two, because, like I said, I suspect that on some levels, the SEC would be worried about these regulations being vitiated by the court as infringing on First Amendment rights of companies. So if that were to happen, it would really open Pandora's box as to what else the SEC regulations, in terms of disclosures they mandate or speech they prohibit, like what else might run afoul of First Amendment, the First Amendment. So I suspect that that's part of the issue at the SEC.
On the topic of disclosures and SPACs, Dan, why don't you tell us what the guys over at Skillz just disclosed the other day?
Well, on the topic of SPACs, to tell you the truth, I couldn't be more bored than talking about SPACs. It's just like, it's enough. But I'm never going to get bored of Skillz, because they just don't disappoint. As many people know, we put out a report on Skillz. Turned out to be timely. They ended up shortly after that pre-releasing their Q1 and just totally tanked on adjusted EBITDA, like doubled the loss there. And that's adjusted, by the way, so they can't even figure out their own bullshit. Great idea about Skillz this week is the lawsuit. There's trouble in paradise, right? The Paradise Brothers. Andrew, the one-of-a-kind, wonderful man running Skillz, who everybody loves, and Jeremy, his brother. Apparently, Jeremy is suing his brother for fraud. What's a little fraud in the family? I encourage you all to go read this lawsuit. It's great fun. It really speaks to everything that I've heard when looking into Skillz. I've really never heard of everybody I've actually talked to disliking a CEO so much. I mean, even the analysts think this guy's a douche. And if you don't think so, go look at his CNBC appearances. It's ridiculous. I don't know if you saw him yesterday.
What about the questions on revenue recognition, on accounting, comparing you to other frauds? What do you intend to do to respond to those? And are you considering legal action?
We're not considering legal action at this time. We think the reality of it is these short reports are without merit, and they arrived at conclusions that simply do not tie out against the business that we're building. We followed a similar approach to other marketplace businesses, whether Uber or Lyft more recently or others, which is really the comp set. The approach that we follow, it was actually set up by Ernst & Young and then validated and reviewed by the SEC. I think the reality is these reports just simply don't understand the business that we're in. And I think investors like Kathy have expressed that.
What about the more broad point or question, Andrew, that most of your revenue by percentage is sort of plateauing or flat versus a much smaller percentage that is in fact growing very quickly? Is that a fair point at this stage in your life?
I don't think it is, and I can't comment too specifically as we're in our quiet period right now. But stay tuned until the next week, and we'll be happy to share more information as soon as we can.
It's a lot of fun to see. The guy's very, very impressed with himself, and apparently his brother, not so much.
My favorite fact about the Paradise family is that Paradise is not the original last name, right?
No, it's Paradisi or something like that. Apparently the brother got in trouble like 10, 15 years ago, so changing a couple letters might have helped with that, but who knows? Or maybe they just like the sound of Paradise. The only people that are really in Paradise, where Skillz is concerned, are Andrew and his cronies who are running Skillz. They're making hundreds of millions of dollars cashing in. Investors think they might. I disagree.
And that thing's still a multi-billion-dollar company, too.
On paper, the market cap is multi-billion dollars, but look, what we considered microcap frauds 10 years ago are multi-billion-dollar companies. What isn't these days? So I'm not impressed. What impresses me is profit, continued revenue growth. And if you're going to make up your own EBITDA numbers, you probably want to go ahead and make those and not miss it by, double digits.
And then pivoting to another one of our favorite companies out there is GSX, who had an investor day recently. What are your guys' thoughts there at this particular venture?
Please show clips from the investor day.
This large round building featured our main office building. Our founder is Larry Chen. He founded the company on June 16, 2014, and has more than 30 years of experience in the education industry. 下午3点，么么哒，管理演讲，么么哒。3 p.m. Beijing time, management speech on the way.
This thing was it was bizarre. So one of my colleagues sent me the link to click on it, and I was a couple minutes late, so I actually thought it was the wrong link, and I was on some fantasy Chinese streaming thing, because it was literally a dinosaur. Not
unusual for you.
No, although I don't log into my own account on a work computer for that stuff, so it's totally compliant what I do on those websites. And if you guys want to visit my OnlyFans page, joking. Yeah, so I actually thought it was the wrong link, so I went back and pulled the correct link up, and I was like, no, this actually is someone in a kind of Barney the dinosaur outfit talking to someone who allegedly works at the company with English subtitles. On top of that, they've totally changed the business model. One of the key bull tenements, this is actually growing really fast and profitable, is no longer a thing because the SG&A blew out ever since short sellers started targeting the business. My honest thought on it was, up until they filed the 20F, I thought, these guys are going out of business. They're not going to get the audit filed. And they were just sitting around the office kind of arguing over who's going to get to sell stock first. And one of them said, the SEC, let's do the stupidest investor day ever so we will be remembered for something spectacular. And, after watching the investor day, there was something that kind of put a smile on my face. It was the thought that somewhere in the risk department at CS, there were like these 4 Swiss dudes who were going to be sat around. It would have been like 3 a.m. in Switzerland, logging in, getting up and being like, oh, we got a lot of risk on still in this piece of shit. Like, let's look at what the company does. And seeing Barney the dinosaur talking to a lady on screen. But turns out the joke was actually on us because they were able to file the 20F, which, defies.
Amazing.
Yeah, but is it really?
But yeah.
I mean, look, in an even less than ideal world, yeah, it's still amazing. And there's nothing better than a China-based investor day. I get it. They're fun. But for GSX to be able to file and an auditor to sign off, it's just a new low bar every day.
So there's one thing I vehemently disagree with Freddie on, and that is it was a Teletubby, not a dinosaur. Aside from that, we're pretty closely aligned. But no, I mean, look, what obviously happened here. So if you look at GSX's 20F, and there was an audit matter that was disclosed. And you also see the audit fees, I think, were roughly double what they were the year before. Deloitte, in that disclosure, made clear that they went into the CRM system and they did a lot of work to make sure that, the enrollments looked real and that they seemed to be saying that they were making sure that inflows into the bank matched enrollments. And yeah, like, here's how and why. Sales and marketing expense went through the ceiling right after the short seller reports, including ours. So the company is obviously round tripping, and it's beyond the scope of Deloitte's audit to look at the parties that were receiving the sales and marketing spend, which I'm sure, if you really dug in, if we knew which entities those were, we could, I'm sure, trace them and make obvious links back to Larry Chen, the chairman, and other GSX people. And so, like, this is clearly being round tripped. And this gets to the point that these companies from China have no place trading in the US markets because China is a weak rule of law jurisdiction. Like, that's not a shocker. It's an emerging market. I mean, but de facto, EM, FM, they have weaker rules of law. And it's particularly weak. And there's no comity with the US. So you have no shortage of all of these parties in China who are available to help you commit fraud because they don't worry about going to prison in the US. They don't worry about the reputations. Like, hey, yeah, we went to school back in the day and, I can make $100,000, which to you, your stock's worth blah billion. That's pocket lint to you and it's a lot of money to me. Sure, I'll set up some companies, help round trip this. These companies from China are above the law. Like, literally, they are above US law. And we see this time and again. And if we look at the companies that we've written on since, the last washout of these things in 2012, that Dan, you've written on, guys like Soren and Matt and others have written on. And I mean, there is a compendium of frauds, from the more mild, like 30% we're lying about revenue to, we're lying about almost 100% of revenue. There's a compendium of these things that have not been erased, where nobody's been held accountable, and they've traded with real market cap for a while. And some, the market caps are much bigger than they were. This is, and I guess if we really want to get into it, why this is bad for America, because people would say, well, gee, look at Tal Education. You guys called it a fraud, which it is. It's a real business, but it's a fraud. And, it's gone up. Isn't that good for American investors? And really, and maybe this gets a little too meta, but I think one of the core issues with the United States of America right now as a society is that we are divorcing ourselves from the rule of law. We are unfortunately becoming more like places such as China, where there isn't a rule of law. And when you have in our capital markets, which is, the lifeblood of our economy, when you have about 400 companies out of, I think, probably roughly 3,500 that are listed here that are above the law, and everybody, who's who looks closely will know that there's some real cheating going on there, that is deleterious to the rule of law in our markets and therefore deleterious to the rule of law in our society. These companies have no place in the United States of America if they are unable to be investigated, let alone regulated.
Speaking of which, if you look at the numbers, we have a chart here that shows for the past couple of years, Chinese companies have raised U.S. IPOs, and it's upwards of $6.5 billion now in 2021, which is just insane. Why hasn't anyone stepped in to do anything about this yet?
Well, I mean, here's the problem, and it gets to, I think, one of these fundamental questions about ESG. The ESG proponents will say that, capitalism can fix the world's ills. I'm not a Democrat anymore, but I got to tell you, there are situations in which the government must legislate or regulate to stop. And because the investment banks sure as aren't going to stop bringing IPOs from China. It's great business. And, for fund managers, especially long onlys, it gives them more dream to sell, more financial product. So this, and I think that this industry, the finance industry, is probably going to be the last industry that really decouples from China, if it decouples at all, because the money that is made by Americans who have real influence and political power here is just enormous. But it is detrimental to our society. It is deleterious. And it needs government action to stop this. And the other thing is, when I've talked to people involved in China policy before, I mean, they really know nothing about finance and markets. It's like guys like us don't go to Washington enough to talk with them. And, and that was, to me, one of the really inspiring things about Dan's congressional run in 2018 was the U.S. government needs a lot more of this perspective. Financial markets, not just with respect to China, but in general. But, unfortunately, that wasn't to be for Dan.
Well, look, when you're talking about like China as well, and your question is, why doesn't somebody step up and do something about it? So I guess you're talking about the corporate side or the government. And the government nominally is doing something in a bill that's not very important in my mind as far as how strong that Kennedy bill is. But on the corporate side, China can be very punitive. What are you going to do? Are you going to be the one that's going to step out in front as a corporation and say, look, on behalf of American investors, we think human rights are violated. We think that there's no rule of law. There's no comity between the United States and China, and we're not going to invest there. And see what happens. They will openly say, any business interest that you've had or do have in China, we're going to go after it. They do it for the biggest companies in the world, and they'll continue to do that.
Yeah, and the amazingly sharp thing that China has done, I think this is really undeclared government policy. And let me stop for a second just to point out that when we're talking about China, we're talking about the government of China, we're talking about the system that the government has created there, the very small number of beneficiaries who list their companies here. We're not talking about the Chinese people. All right. Yeah. So let's put that to rest. Should anybody wish to object. But all these investments in Hollywood and the NBA, right. They've bought off our cultural institutions. You go back to the Cold War, and Hollywood churned out all kinds of anti-Soviet movies. Right. The Soviets were the enemy. like that helped rally the country behind that cause. I mean, nothing gets approved right now for release in the US without China government censors essentially okaying it.
Yeah, but that's actually been a good thing for the Brits because it allows us to play all the bad guys in films. So it's not been entirely a negative thing that.
I mean, it's pretty crazy the way they can have a blowback on U.S. corporations. Like, I don't know if you guys saw that essentially Nike and I think someone else stopped taking materials from Xinjiang, and basically their sales just went through the roof because they basically made it a national priority. So those
also we're short of ours. 2019.
Yeah,
it's done this.
Right. Yeah,
commits fraud, real business commits fraud and enslaves people. But hey, as far as Western portfolio managers are concerned, it's a buy, right? Because who gives a